Hello traders and investors. Are you having a hard time staying profitable like a lot of stock market participants? In this video, we'll go over 5 critical mistakes made by traders and investors and how to avoid them. We'll look at real chart examples and go over ways to increase your profits. Trying to time the bottom. Have you ever bought the dip, but the dip kept on dipping? Trying to time the bottom is a common mistake made by traders and investors. Pinpointing the bottom can be an incredibly difficult task. Traders should wait for a solid level of support to form before entering a position. Not understanding the structure of the overall market. Since most stocks follow the direction of the overall market, traders and investors need to know the current structure of the overall market before opening a position. Is the overall market currently in an uptrend? Is it in a downtrend? Is it trading sideways? Is it at resistance? Is it at support? Traders and investors should ask themselves these important questions before entering a position. Let's take a look at an example of how the structure of the overall market can directly impact a trade. This is the daily chart for Ford Motor Company on December 10th, 2021. Notice the big move to the upside. Then there was a period of consolidation. After that, there was a huge breakout to the upside. From a technical standpoint, it doesn't get much better than this. A pattern like this can lead to an even bigger move to the upside. But is it a good time to open a long swing position? Let's take a look at the structure of the overall market before making this decision. This is the daily chart for the overall market, the S&P 500, on the same day. Notice that it is at an obvious level of resistance. Buyers have failed to push the market above this level for a month. It has been chopping around with no real direction. There is talk of inflation. At any time, sellers can come in and push down the market. If the overall market has a downturn, Ford could have a downturn as well. This is a low probability swing trading environment. Let's see what happened after a few days. As you can see, sellers stepped in and pushed down the market. The overall market is down 3%. If the overall market is down, what do you think happened to Ford's stock price? Let's take a look. In only a few days, sellers have pushed down the stock price of Ford Motor Company by 10%. This is a good example of how understanding the current structure of the overall market can prevent traders and investors from entering a bad position. Not trading stocks with relative strength. Traders and investors increase their probabilities of success by investing in stocks that are performing better than the overall market. Choosing stocks with relative strength is one of the best advantages traders and investors can have. Let's take a look at an example. On the left is the daily chart for the overall market in September of 2021. On the right is the daily chart for Home Depot during the same time period. Notice that the overall market is in an obvious downtrend. It is making lower highs and lower lows. During the same time, Home Depot is in an obvious uptrend. It is making higher highs and higher lows. Since Home Depot is in an uptrend, while the overall market is in a downtrend, Home Depot has relative strength. If the overall market finds support and reverses back to the upside, what do you think will happen to Home Depot? Let's check back in a few weeks. As you can see, the overall market found support and reversed back to the upside. Since Home Depot was already outperforming the overall market, it made an even bigger move when the market reversed. This is why it is important to invest in stocks that are already performing better than the market. When there is a pullback in the market, this is a good time to find stocks with relative strength. FOMO. The fear of missing out. Imagine logging on and noticing the market is up huge in the pre-market. Your favorite stock is up 200%. The market has gapped up to an all-time high. You seem to dream about the profits. The market opens. Your stock immediately rips to the upside. Its journey to the moon has begun. You only live once, so you go all in and buy a ton of shares. Then, it happens. The market reverses to the downside. Your favorite stock takes a dramatic turn against you. It is no longer headed towards the moon. And those profits, well. The fear of missing out is a real emotion that has caused a lot of traders and investors to lose a lot of money. A wise investor once said that the stock market is a device for transferring money from the impatient to the patient. Let's go back to the daily chart for Home Depot. This is a 40% move to the upside in less than 45 days. Impatient investors with the fear of missing out will buy at the top. Patient investors will realize the stock has already made a big move and wait for a better opportunity. Let's check back in a few days. There was a massive sell-off to the downside. Let's get a closer look. This is a daily chart. Each bar represents 1 day of price action. This is a very strong sell-off. It only took 2 days to wipe out 10 days of gains. What could have caused such a massive downturn? The investors with FOMO bought up here. The stock makes a turn to the downside. All of a sudden, the investors with the fear of missing out become the investors with the fear of losing money. So, they sell their shares in a panic. You also have investors looking to short the stock up here. They're selling to open their positions. These two groups of investors selling at the same time help create the massive sell-off. This is why it is important for traders and investors to keep their emotions in check and not chase equities that have already made huge moves. Not knowing how to short the market. Short selling allows investors to make a profit on stocks or other securities that are going down in value. There are many reasons to short the market. We'll look at an example of how shorting can help hedge your portfolio when there is a downturn in the overall market. This is the daily chart for the overall market on January 5th, 2022. Notice how the market has had a hard time breaking through the level of resistance. This bar is a warning sign that the sellers are in control and the market could have a downturn. To protect your overall portfolio, this might be a good time to short the market. Let's fast forward a few weeks. This is a brutal downturn in the market. More than likely, your overall portfolio lost some value. But remember, you shorted the market up here. Although your overall portfolio lost value during the downturn, you made money as the market went down by shorting. This is how shorting can be used to minimize losses in your overall portfolio. Eliminating the mistakes mentioned in this video can lead traders and investors to financial freedom. If the information in this video is valuable to you, please like, share, and subscribe to the channel for more videos on investing.